$17 trillion. That's the estimate of how much money the financial crisis erased from the value of global share markets last year. And Australian investors were hard hit, the local market falling more heavily than those in many other developed countries.
The world's share markets took a hammering in 2008. So just how much money was wiped off the value of stocks? Ratings agency Standard & Poor's has put a figure on it: $17 trillion US. Russia had the worst result, plunging nearly 74% last year. The Australian market fell 54%, higher than the average fall for developed nations. The US was down nearly 39%, and Japan was the best performer of developed countries, falling 29%. So should we expect more share market bloodletting? Standard & Poor's expects the second half of this year will be better than the first. It's forecasting gains of up to 14% on the US market. That could deliver some relief for Australia's battered share investors.
There's no doubt that the first half of 2009 is going to be a tough year, not just for the Australian equity market, but for global equity markets. However, there is certainly a glimmer of hope looking beyond that.
And there's further evidence of the extent of the economic slowdown. In November, retail trade grew by just 0.1% in trend terms, up 1.9% for the year to November.
There's no doubt that the November figures are a reflection of exactly how flat the retail market was last year. It's probably one of the low points of the year, there's no doubt about that.
The figures don't take into account the impact of the government's economic stimulus payments, which started flowing in December. Perhaps not surprisingly, the government's more upbeat about today's retail trade figures, and it's hopeful its economic stimulus package will boost spending in coming months. The Assistant Treasurer concedes the November figures show only moderate growth.
These figures are a reminder that Australia is very well placed to get through this international crisis, but the situation will be tough for the Australian economy over the next year.
The housing market isn't doing much better either, despite falling interest rates. New home sales fell by 1.1% in November. The housing industry is blaming the credit crunch and economic uncertainty. It's called on the government to provide more incentives for people to build new homes. Richard Davis, World News, Australia.